And Wall Street stocks recouped from 6-month lows on Wednesday as investors drew a sigh of relief following below estimate US inflation data for February. This helped global markets regain their footing on Thursday. Now, notwithstanding the recent tit-for-tat development in the global trade conflict, stock investors' focus was on easing inflation. Trump vowed to impose further tariffs in reaction to retaliatory threats from the European Union and other trading partners, despite the recent market meltdown, justifying his tariff rhetoric. Trump said, "Whatever they charge us, we're charging them." Global markets have been whipsawed this year from Trump's escalating tariff wars. With Wednesday's advance, the S&P 500 is 8.9% below its all-time closing high reached less than a month ago. While US stocks reacted positively to easing price pressure data, the question now, how much juice does this bounce have? The blue chip Dow Jones index seesawed between red and green for much of the season, but ended modestly lower. US bond investors dismissed cooling inflation reading as recession fears from tariff wars dominated their mood. The spreads between the yields on corporate bonds and US treasuries hit their widest since September this year, and this points to mounting investor worries about recession and a global trade war. Greg Bassick, CEO of AXS Investments in New York, told Reuters, and I'm going to quote here, "We're seeing a bounce today on the lower than expected inflation read and some dip buying, but Wall Street and Main Street are still looking for direction." Investors' hopefulness about inflation cooling is being mitigated by the ongoing trade war strife. And for that reason, we really expect the uncertainty and volatility to continue through much of March.